Welcome, welcome to my page. Thank you so much for joining today. I have a special guest with me, Noel Cookman with the Mortgage Institute, and he has got so much information to share to us all. Now, the reason why I asked him to join me today is because one of my colleagues was sharing me a horror story. It's horrible. Her deal didn't close, and she said because her clients were going through a divorce and the divorce decree wasn't set up correctly or something happened that title rejected it and they weren't able to close. And so you guys know, if anything that impacts our ability to close a transaction, that's devastating to us and devastating to our clients. So I said, I don't want anyone to have to go through that ever again. So I was talking to Noel, who is a long time friend of mine. I met him through one of my classmates who introduced me to him, and she was buying her home and her beautiful home in Flower Mound. And he was able to get her closed, her family closed. And I said, I told him the story, and he says, he's an expert in all of this. And he said he's going to share today. He'll share 3 myths with us about going through a divorce and buying a home. It's really going to blow your mind on the things that we really take for granted and don't think about, that Noel and his team are experts in taking care of. So Noel, thank you so much for joining me today.
Thank you for having me, and it's an honor to be with you. Andy, my son, who's my right-hand man, or maybe I'm becoming his right-hand man now. We'll see how that goes. But he's for years has spoken so highly of you. I think you all interacted on that transaction a lot years ago. So our team and our household considers you a hero and just an awesome person. And in addition to being a great realtor too. Thank you for having me.
Yeah, well, thank you very much. So you guys do this every day. You see the things that happen. My clients, they don't know. I guess a lot of people who are going through the change in life, I guess we call it, because we don't really, we don't judge anyone, but we know that people are going through changes. And right now, a lot of people, unfortunately or fortunately, depends on what side you're on, are going through divorces. And I think if you're going to go through the divorce, then you may as well set up the divorce decree in a way so you can start your life over again, anew. So you're going to share with us some myths that we all had about going through a divorce and then wanting to buy a house. So the first thing I know, I have my notes here so I can make sure that I can keep up because I know you know this by memory. But
I get off track sometimes too, so you got to keep me on track. Keep me on the notes.
No problem. So a lot of people think that you can just, file for divorce and then just go buy a house. Sometimes even before the divorce decree is done. Is that true?
Yes, but the way you said it, a lot of people think you can just do it. In other words, the implication is that divorce or even the filing of petition for divorce, what we call independency of divorce between the petition that's filed and the final divorce, that affects your ability to buy a house and to get mortgage financing. So obviously, both of those go together most times if you're not buying for cash. But even if you are buying for cash, you still have a divorce that affects a lot about that. So you can. The straightforward answer to the question is, can you do it? Can you just buy a house after you filed for divorce, before or after final divorce, whatever? Yes, but you need somebody to navigate you through those points that need to be synchronized between the divorce settlement and the financing and the purchase. It's kind of like you add title work in there, and you have several fields, even professions, but several arenas that have to get synchronized. But the answer is yes, it's possible.
It's possible, but like you mentioned, there are some things that have to be worked out. Like there's a community property. All of your real estate has to be addressed, right, in that divorce decree.
Yes, especially the one you're getting ready to buy. And So like the first, before we even get into the three myths, I think what the way you said it was the perfect introduction. A divorce affects your ability to buy a house and to get mortgage financing. And I know Andy was going to try to log on and watch us. You first said you guys do this all the time, and I'm thinking, yeah, like from early morning till late at night when we fall asleep, we're so inundated with so many people, and we're not even scratching the surface. But so many people need help with this buying homes, and they're going through a divorce, and they get so many uh, so much bad information and faulty information out there. So that's why we said, look, let's address the main myths. But yeah, the first thing is to realize that your divorce decree, for instance, or a divorce settlement before the final decree is going to be reviewed in some form or fashion by an underwriter if you're trying to buy a house. And even, and like I say, if you're paying cash, it's still a title company issue if you want clear title, and the seller wants, to be able to deliver clear title too. So a divorce affects everything. If you think about it this way, like we'll ask somebody for, we need your divorce decree. Like if we don't talk to them until after final divorce, or if we're working with them, which is our favorite thing to do, working with them before final divorce, we say, I want to look at the drafts of your decree. And sometimes they'll say, well, let me just send you the part that has to do with child support or whatever we're asking about, or the purchase or whatever. So they'll send us a few pages. No, we want the whole thing. Why? Because remember this, if you're anticipating a divorce, going through a divorce, already been divorced, an underwriter will read every word on every page of your decree, even the ones that I don't care about. I like what you said earlier. We don't judge, and we don't, it's not that we don't care about the individual, but you don't have to tell us who did what to whom and who got, I've heard more stuff than I really want to hear. And if the folks really knew, they would know that you and I, we don't have any judgment. We're not trying to pick sides and say, well, you're a bad person or your spouse is a bad person. We just want to make the deal work for somebody who needs to get in a home. So, there's no judgment. There's only a desire to make this transaction work for you. So, so just understand that an underwriter is going to review everything. And why is that? The reason is because a divorce decree creates liability that is not always on a credit report. You say, well, they just pull my credit and I can qualify with that, and those are my debts. Well, no, a divorce means that you could be assigned a liability that does not appear on your credit report. And people don't think about this. They'll say, no, I don't have any other liabilities. And then we get the draft of the decree, one of the reasons we want to review it. And that loan to Uncle Joey has to be repaid. It's not being reported. Uncle Joey doesn't report to the credit bureaus, but it's got to be repaid. The underwriter goes, hey, I want to see the terms of repayment, because that creates a liability. So that's just one example of why an underwriter is going to read every word. So I've got a few. Did you want me to jump right into those myths?
Yes, you can jump right into whatever you feel comfortable sharing. You've already told us a whole lot of information, because you're right. Like, a lot of people don't even consider those things. So yes, let's jump right into the myths and get started.
Great. And the second one is not like a statement of a myth. Well, it kind of is, but you'll see when I get to that. But that scenario that you had where the day before closing or the day of closing, like, oh, you can't close. Why? I think back then it had to do with they couldn't sell a house or something because their ex-spouse was still on title and the ex-spouse hadn't signed. There's a lot of reasons that would hold that up.
Right.
But one other classic example, and then I promise I'll get right into the top 3 myths. One of the classic examples is what we call funds to close, because a lot of times a loan officer, like me 22 years ago, when I would try to get a deal done and the underwriter says, we want to see the divorce decree. I'm like, oh my gosh. And so I asked them for a divorce decree. I start reading it, and about page 2, I get a headache, what they call a migraine headache. And I said, I'm not going to read this. It's too complex. I just sent it over to the underwriter, and the loan was disqualified because there was a debt that appeared. Another common thing is that everybody thinks, I say everybody, but a lot of folks who are going through a divorce thinks, okay, will think, I have got my loan approved. My loan officer told me everything's approved. And then at the last moment, they're using money for a down payment. Well, that is community property, or you have to have declared in something like a final divorce decree that it is not community property, it is separate property. There's a legal distinction there. Or else your spouse that you're getting ready to divorce has to sign a use of funds letter. Remember those? You probably run across that several times. It's called use of funds. Do you have, and it doesn't make any sense to us because your client's name might be the only one on that bank account. But the lender says, I want a use of funds letter signed by the ex. Well, if the ex soon to be ex got up that day and decided they were sideways about something, and you waited till then to get them to sign, guess what? The deal falls apart because you don't get that signature. So there's too much left to chance as kind of like a general statement. If you're just kind of flying through and you don't have some expert guidance along that way to say, here's what to anticipate. Don't put this off. We can't wait till the morning of to trust your soon to be ex to sign something, right? So
that's right. I mean, that's great information that you shared, because some things I got from it are, first, we think that just because we bought the house before we got married, or and the husband and the spouse moved in, it's just our house and we can do what we want with it. And Texas is a communal state, so that means that everything is 50-50. So that's just, I'm glad you shared that, because that is a myth. That's not true.
Yeah, and another thing is, think of it this way. It's kind of like 50-50, but there's nothing that says it has to be 50%, 50% on something. Sure. But what you mean by that is it's really both of you. And it's like, until you say it's 50-50 or 45-50 or whatever, it's both of you. And so you own that property, both of you, which means it takes both of your signatures to transact that property somehow. So I can get into that more specifically later if we have time and you want me to. But here's probably one of the biggest myths. Number one, you cannot purchase a house before final divorce if divorce petition is filed and pending. In other words, you're going through a divorce. A lot of times we hear, now you watching, listening, whatever, you may not have heard that, but please believe me, a lot of people have heard that, and have heard it from people like in my industry, and even other realtors and lawyers and title companies. And the myth is getting broken down somewhat because there's more attention being paid to divorce's effect upon home buying. But we've heard it said not only that you can't buy a house while you're going through a divorce, but you can't buy a house for 2 years after filing divorce. I mean, I've heard all kind of crazy things. But where that comes from, there's two realms that myth comes from. One is the legal reasons, which it's not true, but here's where they get it from. It's community. If you buy a homestead property or any house that you intend to live in, whether you can claim it as homestead the following January 1st or not, it's your primary residence, then there's a presumption that that property is community property. If you buy any asset of any size, like a car or a house is what we think of mostly, it's considered community property, or at least, and I'm not a lawyer, but it'll be easy for me to dumb this down for us people, but this is the way it works in the real world. There's just this underlying assumption. So lawyers will tell their clients, you can't sell the house. You can't sell the car, you can't buy a house, you can't buy the car. What they mean is it's going to trigger community property interest for your that your spouse will have community property interest in that asset that you're going to buy. So it's possible to obtain a separate property during your marriage. It's very possible to do that, but you have to have some legal framework that defines that. Like there's a paragraph in a divorce decree that will say confirmation of separate property. And if so-and-so bought a house before the marriage and then later married and they want to retain that as separate property, they have to declare it in the divorce decree. It has to be specified. Otherwise, there's this kind of underlying thing. Like you said, we're in a community property state. So there's this underlying presumption that everything you buy or take a debt for is community property. So what's the default position? Some counties like Denton County near me, well, actually I live in Denton County. Forgot what county I lived in for a minute, but have what they call standing orders. In other words, the attorneys don't have to draft it up in the petition. It's just understood. It's a standing order in Denton County that you don't go out. Actually, there's pages of it, but you don't go out and buy a house, buy a car, whatever, or sell or take on debt. So that's the understood. So people take that to mean, oops, I can't do anything. Mm-hmm. And here is how that's also been misinterpreted. Some people, it's more rare now than what it used to be, but some people will be advised by their attorneys, the ones who haven't attended my seminars yet, but they'll say, you can't even apply for a mortgage loan. Well, that's not that. There's no order against applying for that. The order is against taking out debt for a big ticket item, what they call a big ticket item, like a house or a car, without the agreement from the other side. So it doesn't say you can't do it. It just says you more or less, you got to have agreement. And if you just go buy it, then you just need to understand your spouse owns it with you. Okay. So, so out of that legal misunderstanding, or the misunderstanding of that legal feature, people say, well, I can't buy a house. That is totally untrue. We've helped people time and time again buy houses before the divorce is final. So my first call with a realtor will go something like this. I heard you, can my client buy this house and get a mortgage before the divorce is final? This is the only time that I have such a strong caveat. Say, yes, it is possible. I cannot guarantee it. And then the next question is, you need the cooperation on that level of your soon-to-be ex-spouse. Cooperation being they have to sign the note? No, I'm not saying that. Cooperation meaning they have to take on liability? No, I'm just saying cooperation. And really, we could get into I have a whole hour seminar on how this happens, but cooperation really only to the extent of what they're going to be agreeing to anyway in that final decree, and you just kind of back it up in what we call a Rule 11 agreement, or what the state calls a Rule 11 agreement, which is kind of takes the place of a separation agreement, because there's no separation in Texas, and several other states are like that, but there's no separation, so you don't have a separation agreement. And but there is such a thing that will suffice. I got to be careful here because the attorneys will smack me over the head if I say it's the same as a separation agreement. It is not. But in the mortgage world, the underwriters and the lenders are looking for something that precedes the final divorce. And remember, we're talking about, can you buy a house before the divorce is final?
Right.
So that's one thing, and we can do this at another time, or I have seminars on it. But
you dispelled that myth that you can buy a house as long as you have cooperation with your spouse that you're divorcing.
Yes, yes, and the twin objection to the legal objection is the mortgage guidelines, And here's where that comes out. They'll say, you can't get a mortgage. Nobody's going to do a mortgage for you. You're filing for a divorce. Well, that's true in a lot of situations because people don't know how to navigate through that. But it's very possible. And that's when I say you need the cooperation of your soon-to-be ex, only to the degree that you're going to be agreeing on anyway. I could give example. Let me give one example of what I mean by that, because that's kind of cryptic, isn't it? Like,
Go
as
ahead.
long as we agree. Well, here's one thing. Usually, child support, let's say, is already resolved. I mean, it's kind of like a state guideline, and there's no departure from that. They're not really fighting about that. And I'd say most cases they're not fighting about it. It's kind of set. It may even have started. One of the things that we would put in that Rule 11 agreement for the underwriter to see is the support payment to, let's say, our borrower will be X dollars. All right. We still have to establish the metrics to make it qualifying income, but we will say it is X dollars, and the X, the soon-to-be X, is already agreeing to that. All right. So we're not making stuff up to trick that ex-spouse or soon-to-be ex to agree to sign something. We're saying what is on the table. What have you already agreed to? What's the settlement going to look like? And so you basically codify that into a pre-divorce agreement. It's called a Rule 11 agreement. But
that makes sense. That makes a lot of sense, because most people do talk to their spouses and exes and have already made out the arrangements. You typically, and then they take them to the attorneys, and then they put all that together. So that's what you're saying, right?
Yeah. Well, actually, we write them up, and only the parties have to sign it. The attorneys don't even have to sign that agreement. Now, because of my relationship with the attorneys, who is how I meet most of my customers, I don't ever do anything that will blindside the attorney. The two parties in an agreement could, because they can say, oh, we're going to do this. They write it down, they sign it, file it with the court. It becomes an enforceable Rule 11 agreement. And then the attorneys later find out you did what? So I never always have a line for the attorneys to sign pro forma. They may even disagree with the substance and say, I'm telling my client, and I've had that before, don't sign this, because they were afraid of the community property issue. And so one more example of what would go in that kind of agreement. And I'm addressing this thing. People say, well, you can't get mortgage financing. You can with a certain amount of agreement. Here's one very important feature that goes in that agreement. The ex-spouse is aware of the purchase agreement, is aware of the purchase of X address, and assents to that, and agrees to take no interest in that property.
Yeah.
All right. And will sign a special warranty deed to that effect upon final divorce. So now you've addressed that community property issue. It hasn't created it as separate property. It has simply created an enforceable agreement where that ex can't come back and say, I told you I was going to sign that. Now, now that house is mine, half mine or whatever. They'll say all kind of crazy things. They've already signed an enforceable agreement that says, I will execute a special warranty deed. So that's one of several features. I don't want to give away too much about my secret sauce there, but I'm telling you, those things can be addressed. And that kind of flipped it back to the legal reasons, a rebuttal to the legal reasons. But mortgage guidelines, you just synchronize, for instance, with the child support. Let's say our customer, our buyer, may be paying child support. We want to say they will be paying no more than X dollars in child support. And if they qualify with that debt against them, then the underwriter goes, hey, this enforceable agreement. So that's a super important approach. So the answer is you want to buy a house and the divorce is not final, and there's thousands of reasons why it will drag on for years sometimes, or that you want to buy a house and it's only a month before final divorce, but you got to get that deal. You got whatever. So you need a certain amount of cooperation, which my experience 9 times out of 10 is not that difficult to get from the soon to be ex, right? Because
That's right.
again, we're not talking about some strange agreement that's out of reason.
That's right. And
So
it's win-win for both parties. And I think it works also because, you know, anyone can say anything in the very beginning, but once you get down to the finalizing things, then people can change. And so having those documents are helpful. So working with a lender, such as Noel and his team, because they know what to expect, they've done this before. And so it's helpful so that the process is a lot smoother that way. But I'm glad we were able to dispel that myth that you cannot buy a home and you can't get a mortgage when you're going through a divorce. So thanks for sharing that part of it.
So one more example, you may have seen this before. A lot of times, two divorcing people, because a lot of divorces are fairly congenial.
Most, yeah,
I've even had people call me and say, "Look, I'll sign a note. I'll even go on the new note with them to help them buy the house." And I show them, well, that's nice, and here's how we can help you to, offload that liability or whatever. So I'll try to actually pick up another customer there. But a lot of times it comes down to, will they sign the deed of trust at closing? Now, there's a myth out there. It's not one of the myths we're talking about today. There's a myth that says the spouse has to sign the deed of trust at purchase of a primary residence because of the community property interest, the homestead protections. It's not true. There's no law that requires that. There's nothing in the Constitution that requires it. No statute, no code, nothing requires it. A title insurance company likes to have that, but there are now plenty of title insurance companies that do not require it. But if you don't warn them in advance that the lender, are not going to send over documents, we're going to send over documents with only our borrower's name on it. The lender can't then require signature of the spouse on the deed of trust, and then the title company say, well, we don't require it. No, if the lender requires it, the title company's going to follow through. But so the lender needs to know what they're doing. The reason we would do that, even in the most congenial of circumstances, is, I've mentioned it before. How is your soon-to-be ex-spouse going to wake up that morning?
that's right.
Just happens too many times. They will use that one thing as leverage. They decide, I want to renegotiate child custody or even visitation or something small. And that is one thing that they can hold. So we say, take care of all of that beforehand. Do not get involved in a transaction where you've promised and you put out earnest money and you've put all these people to a great deal of issues, the mortgage company, the realtor, and everything, and then have it fall apart because your soon-to-be ex, who's got nothing on the line really, it decides to use that as leverage to get what he or she wants. So that's one reason why it's just bad advice, even though I'm sure it's worked out plenty of times, to say, well, my soon-to-be ex is going to sign the deed of trust, no problem. You don't know how they're going to wake up that day, so don't count on it. All right.
Very true. Very true. Thanks
too much
for that. Yeah.
I'm like the preacher that preached long sermons. His kid said, "Hey, Dad, what does in closing mean?" His dad said, "Absolutely nothing." So,
That's right. And I've had situations like that where they've said, yeah, my husband said he's fine with it. He's going to sign. And then we got to the closing table and they had to work out an agreement.
Wow.
So
there's no, you don't need to do that if you prepare beforehand. So anyway, we've exposed that myth. Here's a second thing that's not stated as a myth, but it is a misconception. And I say it as a statement here. Divorced or divorcing home buyers will either qualify themselves or disqualify themselves. And here's what I mean. A lot of times in, say, a mediation, a lot of divorces are mediated now. The courts have said several years ago, look, don't bring us cases. You mediate first. Clear the courts out. So a lot of mediations, good things, I think.
Yes, me too.
And they'll sit around the table and there'll be two lawyers, two clients. They may even bring in and the mediator, they may bring in a financial advisor, all kind of people, but there's nobody at that table who can say yay or nay on the mortgage financing. So here's what happens many, many times. And by the way, I might be sitting there, but it takes me a little bit of work to say yay or nay on a loan.
Right.
Okay. Yeah, I can't just sit there and go, oh yeah, I think we can get this done. But that's what a lot of people do, and that's what a lot of attorneys and mediators are tempted to say, as well as the clients themselves. They go, oh yeah. The famous one is one lawyer said, well, we'll give her $2,500. I do my foghorn leghorn voice. We'll give her $2,500 a month, and any bank will just be happy with that. And it's $2,500 for 2 years. Well, guess what? How much of that $2,500 counts as qualifying income? Exactly zero. Why? Because it doesn't meet the metrics of mortgage guidelines. Mm-hmm. So what we dream of is the day, and we push and push for this. We're getting more and more cases like this. I'm begging people, call me at least 2 weeks before mediation. And the really good lawyers are doing this. They're telling their clients, we're working on, thank God, we got transactions now. The mediation is not until May and late April, so we have a few weeks to work on the transaction so that they can go into the mediation and say, I've applied. It's not just a lender pulling my credit report, but they've processed and underwritten the loan. And by the way, if they're refinancing, they've done their appraisal, and we are ready to close now. Sign here and we have a deal. All right. The opposite has been happening and will absolutely happen every time that the financing or the mortgage or the home buying or the home refinancing issue comes up. They will say, oh, well, she can't afford that house. I can't tell you how many times I've said, let me try. And guess what? I designed a deal and she could afford it. Actually, she or he could qualify for the mortgage. I let them tell me if they can, quote, afford it or not. If I qualify them, some people I can qualify them. They say it's still too much. I don't want to spend that much. So, but if I qualify them, they can probably afford it. But that's not, that's not even for me to make the call on. That's for mathematics to make the call on. Mathematics is kind of dispassionate to everybody saying around the table there, oh, she can't afford it, or yeah, that's not a problem. So I'd say the biggest myth, how would we say that, Carla, is that people can make the decision for themselves whether or not they qualify for mortgage financing. Right. They can either qualify or disqualify. Right. It's most often the other side of things. She can't afford the house. She has to sell it. And a lot of times that's one of the first instincts folks going through a divorce have about their house. They're like, we got to sell the house. It used to be common. It was just expected. They're getting divorced. Oh, they got to sell the house. That's just standard stuff. Well, hold on. A new household is going to be created, so at least one is probably going to buy a house. And it's your job and my job to get in there and say, hey, listen, you don't have to wait 2 years to do this. You could put together a situation, because a lot of them assume, oh, I might have to live in an apartment or whatever, and they're going to pay more for the apartment than they could for buying a house. We found out the last couple of years.
Right. So a lot of times that happens, and you probably see this happen more frequently, is that sometimes attorneys think they know real estate, right? Uh-huh. And they don't really know.
And appraisals and yeah.
They don't know the qualifiers that you know.
And that's why it's so important that you attorneys listening to this, you call somebody like Carla who knows this territory, or just don't call somebody like Carla, call her and say, help guide my client through this. And you know what? I have high praise for virtually all the divorce lenders, the divorce attorneys I know. Attorneys. Good people that are really helping others, are in it to protect the children, and really like to gather around that case professionals like you who help guide people. There's less work for them to do, because they sit around scratching their head, like, oh my gosh, I can't charge my client for this because I don't know what to do. So they love bringing you on board. So but don't, resist that temptation to say, I qualify or there's no way I can qualify.
Exactly.
And people think they already know their own metrics, but they don't. Now, people have said, oh, call Noel, he works magic. I let them think that. That's fine. If they think I work magic, fine. But it's not magic, it's math, or what I call math magic. It's number. I have to make the numbers work. I really don't work magic. And all it is structuring transactions so that the numbers work. Take that $2,500, for instance. Remember Foghorn Leghorn attorney? He goes, we'll give her $2,500 to you. I
Right.
say, I don't know how I thought of this. I have to give credit to God, I guess, because I was thinking, well, actually the metrics are, it's got to extend for 3 years. There's other metrics like you got to get it for 6 months, document that sort of stuff. But it's got to extend for 3 years. And so I go, I wonder what 2,500 times 24 months divided by 36 months would be. $1,600 and change a month. Now all $1,600, $1,666 a month is qualifying income. So I asked Susie Q, would you rather have 2,500 for 2 years or 1,667 for 3 years? You'd be surprised. Most of them would, well, especially if it helps them buy a house.
That's right.
And guess what? You just did a favor for the guy who's paying too, because now he used to have to qualify with 2,500 debt against him every month. Now he goes only $1,600 debt against him every month. All right. So that's not magic. That's not especially genius of me. That's simple math. So let somebody who knows all these metrics, and I use the illustration of the gears, synchronize the gears of divorce with the gears of mortgage financing, and make sure they synchronize so that you have a smooth turn on those gears, and you can bring that deal together. So that's all that is. That's an example of making those two things synchronize.
Well,
so
you may not be doing magic. You may not be have any magic, but you are a problem solver, and you're able to take the things that families are working with and get them to the closing table. So to them, that's magic.
Well, you know what? Exciting. I know this excites you too, because you're like most of the folks that I work with, like you, and I congratulate you on this. You really do care about the people and the children, and making sure they have a home, and making sure the kids live in the neighborhood, that their mom or dad can move to and go to the schools that they may have been used to going to. And the cool thing about this, I'm not saying I'm an angel and I'm just the most virtuous guy on the planet. I'm not saying that at all. I'm just saying it's really cool, because by doing this, you are helping people. You're helping them keep more dollars in their pocket.
That's right.
And it helped care for the kids a little bit better. Maybe a new pair of shoes every 4 months instead of every year. I mean, you're really helping people. So that, I know it excites you, and we've talked through the years, and I know that's what lights your fire. And
it's wonderful. And helping people start anew, a fresh start. Going through a divorce is difficult, but
yes.
Being able to create a fresh start for you and your family is everything. So that's what we love to do. And that's what we help.
The point is you don't disqualify or qualify yourself.
That's right.
Get with a divorce lending professional. Get with a professional in real estate and figure it out.
That's right.
And it's one of the, here's a way that I'm not that virtuous. I don't share my secrets with everybody, because it's not nuclear science. It's math. And once people, understand that, in theory, anybody can do it. And that's fine. I mean, I can't copyright what I do, or get royalties on it. I'm just saying that you got to think that way. So, but it really is math. So, so the third.
That rolls us into number 3, right?
Okay. Now, here's something that you may assume, that you can't use child support or alimony or spousal maintenance. We call it here in Texas more often than alimony. You can't use that to qualify for a mortgage. So I referred to it earlier about the metrics. It's amazing. I mean, it's true that the regulations, as you read the regulations, and we have to go through this anti-discriminatory training, you know, every year. It's in our continuing education. It's in the internal bank mortgage company training, and they got to teach us. They think we're, I guess, a bunch of bigots. So we got to be taught not to discriminate. And I never could figure that out anyway. Like, why, if I discriminate against black, white, brown, purple, polka dot, why would I do that? I was like, because I make money by doing a loan. I was like, I don't care about skin color. I care about green on the. I care about green money more than white paper. And it's like, I never could figure out discrimination, but that's okay. I know that there's prejudice that still is around, but as you read these regulations about discrimination, and it actually took me several years to wrap my head around what they were saying. There's this, okay, what gives rise to that myth? You can't use child support or alimony to qualify for a mortgage. Why would people hear that or think that? Who's saying that to these people? I'll tell you where it comes from. It comes from government regulations that prohibit me from discriminating against a divorced person or a person who receives some sort of assistance. They kind of, I guess they toss government assistance with support or unemployment, that kind of, into one basket or something, and say, we think lenders are discriminating against divorced people, single mothers or whatever, single fathers, whatever. And because you cannot deny a loan to someone because of their marital status. So they go, you better not ask them about alimony or child support. You can't say, do you get child support? Well, because it might, what you're really fishing for is a reason to deny the loan. This is why I couldn't wrap my head around it, because I've done this for 20 years. Next month will be my 20th year in divorce lending. Now, it took me 10 years to catch on to some things, but it's where the idea first hit me in Grapevine. I was jogging around the track there one night and it hit me. But ever since then, I couldn't understand. You mean there's people that would actually discriminate if they could get a deal done, but they're going to discriminate just because the borrower is divorced or divorcing? Because I'm thinking the opposite. I'm thinking, how do I figure out how to get them the loan? And so now the regulations are kind of opening my eyes to that. Well, there's people out there that want to deny them a loan because of that. I don't think there's a lot of truth to that, because I've never had any kind of pressure from any mortgage company I've worked with. Is like, hey, and by the way, watch it about those divorced people. We don't want too many of those on our books. I mean, I go in saying all of my loans practically are going to be divorce related, and it's going to be sole borrowers. So that's why I couldn't wrap my head around it. But that's where that comes from. So if you've been schooled in that regulation, and it's like, don't ask about child support, then the issue is verboten, like, don't ask about it. Well, as it turns out, the guidelines actually show you how to take that support income and turn it into qualifying income.
Awesome.
You just have to know what to do, know how to do it. I'll give you a little cheat sheet here for everybody. This is for everybody. if you try it at home, it might not totally work. So don't say, I did this and you said it will work and it didn't because of this or that. Sometimes there are other considerations, but here's the easy metrics. It's 636, 6 months and 36 months.
Okay.
You have to document that you've received that support for 6 months. And you have to verify, document, then verify. You have to verify that it will continue for 3 years, 36 months. Okay, so 636, easy metrics to know. Now, if you don't talk to a divorce lending specialist until after the final divorce, let's say you get divorced in March and the child support payment begins April 1st, and then you call somebody in April and say, oh, my decree says I have to refinance the house in 90 days. Guess what? You got 3 months of child support that you can document, right? April, May, June.
Yeah.
And then you've got to be out. Or I've got to be refinanced. Or I've got 90 days to move out. So I need to buy a house in 90 days. Here's the secret sauce now. See, 6 and 36, I mean, those are guidelines. That's not a great mystery. It doesn't take magic or genius to know that. Here's something else that doesn't take genius to know. The guideline says document child support is received. It doesn't say, except with Freddie Mac. Freddie Mac has this goofy little rule, but FHA, Fannie Mae, VA say document that the support has been received. So if you'll start the regimen of receiving child support 3 months ago or 6 months ago or immediately, even before you file petition for divorce, there's just a couple things you do that I'll leave to the secret sauce thing. You have to call me to find out what you do. Just a couple things you do, and you create the documentation. You say, well, my soon-to-be ex is not going to do that. Well, there's a way for them to do it without spending another dime and without you getting a dime more. There's a way to paper that over to make it exactly like it's going to be in the final divorce. So we do it all the time. And the key is you don't wait. It's kind of like you disqualify or qualify yourself. You go, oh, I can get a loan. I got great credit. I'll make plenty of money, or I'm getting all this support. So don't wait till then. You've got to start early to get that 6 months in, right? You've got to start 6 months before you need to get the loan, right? And then, of course, to verify that it continues is real simple. Look at the age of the children in the divorce decree. The children's ages are published there, or their birth dates. So you can see exactly in a divorce decree how long that, whether it's spousal maintenance or child support, is going to extend. So it's just a matter of planning for that, setting it up, and carrying through and creating the documentation. So we love to kind of buck against this, this thought that, well, you're looking for a way to disqualify a divorced borrower. Heck no, we specialize in a way to make sure they get deals.
That's right. You think outside the box.
Thanks for doing what you do to help people.
Thank you.
Find a way to get that house.
Yeah, thank you. It's like, and I'm so glad that you shared this myth number 3 that, you can't use child support or spousal maintenance as qualifying income. You definitely can. You just have to work with someone that knows how to do it.
Exactamundo.
Exactly.
And, I've never, here's a cool thing about what we do. You might think that, because I advise, I should say I consult on divorce decrees before they're finalized. So you might think, well, I'm getting into the substance of a divorce settlement. I actually don't. I avoid like the plague.
Right, those details, right?
Yeah, trying to be a lawyer. I find out what's on the table. I find out what's being agreed, And I never say, hey, you ought to pay this, or you ought to get this, or this is what the buyout ought to be, or he ought to give you that. No, I don't do that kind of stuff. I find out what's being talked about, what's agreed. It's kind of like that $2,500 a month for 2 years. So I say, well, why don't you do $1,660 a month for 3 years? Same number of dollars. And we've restructured payment schedule like that many, many times, so that now they qualify, and it never harmed anybody. It only helped both parties. It's really rewarding when you meet the other spouse, and they say, I want you to do my loan. I'm going to go on and buy a house, or I'm going to refinance this house, and I want you to do my loan. We do a lot of that because I've never had to hurt one side to help the other.
That's right. I love that.
If you're helping somebody buy another house, you're not hurting their spouse. You're helping them. You're helping everybody get what they've agreed to get. So right. Find out what's on the table. There's a way to twist and turn and figure it out, and get that deal figured out for the customers. And it's kind of exciting to see them get those houses
at closing, right? And that's what it boils down to. And that's why I love what you do, what you and your team do is, like you said before, you take something that could be a difficult situation, a negative situation, such as going through a divorce, separating families, and you take the information and change it or use it to benefit them so they can start their lives again, and make it a smooth transition, because it's a difficult time for everyone. The children, like you mentioned, going through a difficult time. We all know that kids from divorced parents have the hardest time. But what you and your team do, and what I love to do, is help families put that back together again. It looks different. It's not going to be the same, but it still can be happy. You still can be happy. You still can, move on with your lives. And that's what most people want to do. They want to move on with their lives. They don't want to hurt their spouses. Sure. They want to just, be in a better situation. And that's what you do. And that's why I love talking to you. And I appreciate everything that you shared today. These 3 myths have helped me, and I hope that it's helped all of you who've had a chance to listen to us, whether you are caught us live or you watch the replay. We hope that we were able to share some information that you didn't know. And if you would like to, if you're going through a divorce and you have some questions, you can always reach out to Noel, and here is his number. You can give him a call and ask him questions about your situation. And once Noel gets you set up and ready to purchase, then my team and I, that's when we come in and we're able to help you find the home that you and your family will be happy living in.
Yes. And closing, before I let you go, I want to tell you something that you have done hundreds of times, but you may not know you've done it. I got a comment about a year or so ago. I did this social media thing with my past customers, and a guy posted. He says, 8 years ago, my 2 sons. It's one of the few times I actually got choked up reading this thing. He said, my 2 sons, they for 8 years now, they were able to sleep in their same bedroom that they grew up in as little boys. And they got to wake up in their own bedroom for 8 years, thanks to what you did. So here's how that hit me.
That's wonderful.
I didn't know about that for 8 years. And I may still not have known about that. You have no idea how many kids and parents that you've helped. You have helped, and you may never, ever in this life know about it. And here's something else. Those kids don't know who you are necessarily. Some may, but those kids don't know. They they just get to wake up in a better situation, in a familiar surrounding, or in some situation where you took a few bumps out of the road, you took a few roadblocks out of the way. And thanks to you, those kids, we know they're happier. But you probably will never know about 99%. You'll be lucky if you find out about 1% of them.
Yeah.
So you, Carla, need to carry that around in your head, that there's people out there and you just don't know who they are. It's okay. You never will. You just know that there's untold numbers of kids out there and parents who have been blessed beyond description because of what you've done to help them get in their situation.
Well, thank you so much for sharing that. That's wonderful, and you're right. I mean, what we do together is amazing. Like creating dreams, we're fulfilling dreams for a lot of people, and I don't take that lightly at all. And that's why I like to link up with lenders such as you that think outside the box to help people and get things done. So I appreciate you joining me today and sharing all this wonderful information. If you are wanting to buy a home and maybe you're going through a divorce, you can call Noel. Here's his number, and just let him know that you watched our live, and let us know what you thought about the information that was shared.
And they
Anything
can
else?
contact you too, right? You've got your contact information.
Well, it's on my page, so they can, if you want to
Okay.
contact me, they can send me a message,
Cool.
and I'll definitely respond or comment below. And if they call you first and they mention that they saw us on this live, then you know
Yeah.
that you can get them in touch with me. Okay.
I love your studio. Beautiful.
Thank you so much, everyone, for watching today. We hope you have a wonderful, wonderful day. And please reach out to us if you have any questions. Thanks, Noel. You have a good, wonderful day.
Thank you.